So here's the first tool I normally use to look at stocks that I would be interested in trading. I normally have my portfolio, but if I'm looking for extra ones to add, then I'll first of all come to Finviz to have a look. So all you do is you've got different sections here. You can actually scan for stocks. So if we're assuming that you've you've not got any budget limit on the price of this stock, then that's fine. You can just go ahead, but you can change the price of the shares that you're looking at. So as an example, say that we're looking in the, I don't know, say, what should we do? Not under 50. We'll go to say $50 to $100 range for a share, and we'll look over here in the market cap. I always put this to. Now it's up to you how you want to trade. I generally go for a slightly higher market capitalization. So you want to make sure that when you're selecting this, that my personal way is that the company is well capitalized. So if you're going, really big, you're going to eliminate a lot of the potential stocks. But we can go. Let's get rid of that. We can go and just go for. Where's the plus? There are over 2 billion. There we go. So I select over 2 billion. Dividend yield, I always look to go over 3%. No, I do sometimes go 2%. Things like Hormel Foods, for example. But I'm going to go 3% here. And then you've got all other sorts of. You can change by sector or however else you want to do it. But we're just going to take a look at this to start off with. So we've only got 4 pages here, so we've already reduced it right down. We can then order them by price, for example. I think you can. Should be able to. It's not doing anything at the minute. There we go. It's a bit slow for some reason. So here we can see all the stocks. So if you've only got $50 or $100 or whatever, or you only want to go into those price ranges, you can change this as you wish. So here we can see all the kinds of properties, what sectors they're in, and that just gives you a point to start. There's General Mills, one of my own stocks. That's actually, we could use that as an example, but I won't use it just at this time. Leggett & Platt also is a very stable stock, etc. So Finviz gives you a good idea of where you can come to get a quick idea of the stock. Just as I normally write a list down the ones that I'm interested in. Just looking at the capitalization, etc., and how you want to trade the markets. But this will I'll first come along to have a quick look for new stocks, and then if we can go back over to some other tools in a minute, and I'll show you some more. So here we are, we're over on Yahoo Finance now. So it's just a Yahoo Finance or finance.yahoo.com, and you just go on to put your ticker symbol in here. So if I put just GIS, just as an example, I did a video yesterday about Caterpillar. So let's put Caterpillar in. So here you can see Caterpillar's stock come up. I've got it default on the statistics tab, and here I just normally scroll down to the dividends. I can see the payout ratio down there, 34.19%, and it's all the other metrics you want to look at. Now, if you want to go deep into analysis of financial histories and strength, unless you know an awful lot about how companies operate in what sectors, and you can look at general metrics, which is like payout ratio for the dividends. You can look at what dividend yield they're giving and what percentage of growth in the dividend yield. What you need to do is keep it as simple as possible when especially if you're starting out. But I use Yahoo Finance to drill in a bit deeper, and you can also look at the historical data in here. I change this to dividend, and I go back to the maximum, and then I just apply that, and here we go, and it will give you all the dividend history, so I can see exactly what dividend they paid out. They've increased it here in 2019. You can see 86 to 103, and if you can just quickly scan and go back, you can see what dividend they're paying and how much they're increasing it by. 2010, obviously they had a bit of a squeeze on the looks of it, but you can see the dividend's been going up. Dropped here actually, where's 4 to 25 there in 2005. You need to look a bit more into that, what the causes of that were. And you can see they've been paying a fairly solid dividend for a long time. Okay, so it's just a quick way you can scan a stock and get an idea as to how it's getting on. You've got the summary, you've got an awful lot to look at on there. But I would, if you're starting off especially, just keep it brief and just scan and see what you like. I'm just going to go over to another tool in a minute, and I'll show you another way of analysing stocks a bit further to give you just a brief overview. What you need to do if you're just scanning for initial stocks, and you didn't know which one to look at, I normally do 3 different types of fundamental analysis on these websites just to eliminate them. Any ones I'm worried about, I'll just eliminate them straight away. And then we'll go to look at the charts in a second. Okay. So now we're over on a website called gurufocus.com, and what this enables you to do are the snapshots. Quite a nice little display here. This is Caterpillar again, and you can give us a quick financial strength, a profitability focus, and it gives you these warnings. So 3 medium warning signs for this stock. Profit is 4 out of 10, and it's got profitability is 7 out of 10, and it's got financial strength of 4 out of 10. So you can see the Altman Z score down here is kind of in the middle. So not fantastic, but we know this stock's very vulnerable to the wider economy. So we know that already about the stock. So as long as they're not deep in the hole, then they've got massive capitalization. They're an absolutely massive company, and they do pay a reasonable dividend over time. So wouldn't be too worried about this stock. However, as I said before, it's not my favourite. I just use it as an example because it's kind of more susceptible. So profitability looks pretty good though at the minute, but the financial strength could obviously be better. That's just a quick overview. It gives a star rating up there as well. There's a lot more you can look into on this. Obviously, as you know, I trade dividend stocks, so that we get so you can see here the 5-year growth rate is 11.5%, yield and cost 4.69. So it's dividend yield is okay. So it's not fantastic, but it's one of those stocks that people see as fairly solid in good times anyway. So that's just Caterpillar. That's the other website I do use. I think it's dividend.com, and they're Sure Dividend, I think it is. Yes, it's suredividend.com, and they basically give you all the dividend aristocrats that have been around for paying dividends out for over 25 years. So they're obviously my main port of call, and I will obviously buy other stocks as well to trade and to hold further on. What's that rubbish? Reach another peak. I don't care. Right, get rid of that. Right, so I'm just going to go over to the charts now and just show you a quick look at the charts on Caterpillar. Might as well do Cat. So once I've gone over the stock fundamentals and selected the stock from FinViz, gone over to Yahoo Finance and checked it, and Guru.com, and make sure I'm happy with. I don't have to be, it's not. I'm looking for reasonable companies with big capitalizations. They don't have to be the most profitable, otherwise you're never going to take a trade in your life. You cannot eliminate all risk, no matter what tools you use. You just need to be happy with what you're going in. So first thing to do is look at FinViz. Then you look at, do you actually like this company? Do you like the industry it's in? You have to like the assets, I believe, to do this. You've got to believe in if you don't like the company, like I don't particularly like Caterpillar. I like the brand, kind of the clothing or whatever, but I don't like the industry. It's just too vulnerable to the wider economy and shocks in the economy. So I do trade it, but I don't really like to hold it in large quantity in the portfolio, because it can move around a lot due to wider economy. And I, because I'm a technical trader, I kind of I don't like seeing sort of 70% of the stock wiped off the face of the earth because the economy's tanked. So it's just a little bit more volatile in that sense, in my opinion. But as you can see, that I've seen before, if I've looked at those charts and this was the stock I was looking at, and I see a dip like this, then obviously I'm going to buy it. Okay, so you can see that from the RSI. I don't use the RSI, but you can use it as an entry points like you see here. Okay, so we could easily make money nicely in these moves, even if we didn't want to hold it. But I've always got the option that I can just hold the stock for the long term, which is what I tend to do anyway. So I do trade it because I can, increase my returns exponentially by trading and long-term investing in dividends. So it's a mixed strategy I have, which is I haven't seen anyone else talking about it on YouTube, but I'm sure people do it. It's a little bit more complex, takes more time out of your day, excuse me. But it is, I love it. I absolutely love this stuff. So please do like and subscribe and help me grow this channel if you find any of this information interesting whatsoever. Do have a look at my other videos. I did put one on Caterpillar yesterday. It was just one I was just explaining how I trade again, what system I use, so have a look at that if you haven't seen it before. Take care of yourself. It is freezing cold here today. Wind is blowing very hard, so not particularly nice. I'm staying in and doing another video, and I'll probably upload that one as well. But if you want to see any more of these videos, if you can just give me some idea of what kind of content you like to see, and that would help me do more videos in future. Take care of yourselves. Have a fantastic day. It is good out there always. Take care.